Hi, everyone. Welcome to another wonderful live trading room with Lachlan from Samurai Day Trading. What's up? How are you doing, Lachlan?
Very well. The markets are up. They're very buoyant off the back of Nvidia and FOMC last night. FOMC last night. So we have got massive gaps on the European market to navigate around today. So my tip to everybody is we're going to have to be very careful.
Awesome,
Very
awesome,
careful.
awesome. Let's have a look also on our Zoom chat. Let's have a look.
Yep.
There we go. Yep. Oh, there you go. Mark says that in Zoom they cannot hear you. Can they now? Give us a
You
test.
should be able to hear me now. Yeah,
Yeah.
we should be testing.
Yep.
Perfect.
Perfect. Okay. There we go. So, to everyone on YouTube who's watching our stream, if it's the first time, welcome. Subscribe. You should follow us. We're going to have more live trading rooms in 2026. We have really fun things that we are planning. And if you want to join the Zoom chat, you can register through our website to the webinar chat itself, and you can be part of the whole fun. But I'm not going to take
Sounds
too much
great.
of your time. Yeah, Lachlan did mention that today is going to be a very, very interesting day, thanks to Nvidia and the European market also picking up after a gap created. So I am
Mm.
very excited for you guys and girls. Manage your risk well today. You know, let's be wise about it, and have fun and good luck.
Very much so. Good job. All right. Thank you, Alan. Appreciate that. And guys, shout out to TTP again for helping us, guys, helping us grow as a trading academy. Now, guys, again, let's get started real quick. We're going to run through these slides and we're going to do them quickly because we have a situation today, guys, where we are going to have to be very, very careful. Very, very careful. So let's run through this as quickly as we can, guys. We're going to do our compliance and we can rock and roll from there. So first and foremost, as we're going to be using a live trading room today, the reason being is that not only can you get immediate proof of performance, as Alan and I were talking about this earlier, immediate proof of performance is a really, really good way to build a great psychology around a strategy. So what we're going to do is we're going to focus on basically building confidence. I would love to answer your questions, guys. So we'll focus on that in the last 15 or so minutes of the session. We do run two live trading rooms, guys, European Open and also US Close. Alan, I am very much very, very interested in that. But I'm just gonna leave it there for a moment. We'll keep going. So, guys, we run two live trading rooms a day, guys. Next year, we are looking at the opportunity of opening a US Open live trading room, which would be really, really quite good fun. Mercy, how are you? I hope you are fantastic. Mercy, I hope you are happy with the Nvidia profit forecast going way beyond what it was expected.
Climactic volume
We've got climactic volume everywhere. Now, guys, we are going to be trading today, guys. What does it mean? Some of you are on futures, some of you are on CFDs. So first and foremost, we do mention two risks, guys, two risks. There's a risk of making money and also losing money. Now, both of those risks get magnified because we are trading on margin. Margin means we will be borrowing money every time we take a trade, and that's why we're going to have to be very, very careful today, guys, because we are going to get a very heavy shotgun start. Now, guys, everything we do today is general information only, guys. But past performance of all financial products is not allowed to be used as a reference for future performance. We're not allowed to do it. We used to be able to, guys. We're not allowed to anymore. Guys, the presentation as a result is going to be for educational purposes only. I'm going to do my best, guys, to call trade entries and exits as per the 101 trading course, guys, as per the 101 trading course. I can hear other people talking in the background. That is not my computer. That might be somebody else. So I'll send a message. I'll send a message and see if that might be background. Might be background program. Certainly, it's not. Let me just double check. No, it's not my program here. Okay, I'd love to, if they're talking in the background, I'd love to know what they're saying, Mark. That'd be awesome. Now, guys, that being said, with all this said, guys, there are market risk factors. So I'm going to guide you in and out of the market. Okay, I'll guide you in and out of the market as best as I possibly can. Is understanding that there's no guarantee you'll be able to enter or exit the market at the same levels that I will be entering at, simply because we are trading over the internet, and that brings variation into ultimately what we do. Now, who am I, guys? Very quickly. The first and foremost, it could be my NinjaTrader software talking in the background. So what I might do is I might open my volume mixer. Guys, I'm just going to turn my NinjaTrader down in the background because it is triggering climactic volume warnings and everything else. We are setting up very large reversals, guys, so we need to get into this as quickly as we can. So as who am I? Basically, I'm the head coach and system architect behind everything we do at Samurai Day Trading. I've had the opportunity to trade, guys, over my time. I started in 2009, 1st of August 2009. I've educated a lot of traders, guys, in a lot of countries. Ultimately, as I get better at educating, I get better at trading. It's actually a self-fulfilling cycle, which is really quite good fun. Now, one of the things we're going to focus on very heavily today, guys, is the Delta V1 and V2 indicator. Everybody's about to get the V3 indicator, guys, after the annual conference. I haven't loaded V3 yet, but it's an opportunity for you guys to basically track institutional ebb and flows in and out of the market, which is a really good thing to take advantage of. Now, social media, guys, we're continuing to we are continuing to build our social media. So basically, it's all about Samurai Day Trading at this point in time. So if you are a TikToker, a Facebooker, Instagram, or YouTube, guys, my goal with YouTube is to be over 250,000 views, guys, by the end of this year. So wish me, wish me the best of luck. Not that 250,000 views actually means anything. That's like literally small fry in the game of YouTube, but I do like KPIs, guys. I do like milestones, and we have them every day, guys, in our trading. Now, guys, if I talk about anything today that draws your interest at all, guys, for example, the annual conference, guys, we have officially launched the annual conference. Guys, if you are out there on YouTube or Instagram or somewhere and you would like to come to the annual conference, guys, you can either send us an email. I will give you a link that you can click on. Suffice to say, though, if you're not quick enough to get the link, guys, you can literally email Samurai Day Trading, guys, at info@Samurai Day Trading, and you'll be able to get the information for us. So speaking on the annual conference, it's going to be on the 6th of December. It's at 9 a.m. Sydney time, runs for 4 hours. It is completely free. Guys, there is no cost to attending. We are going to focus ultimately on what works, and we're going to talk about what doesn't work as well. So you guys are in for 3 master classes. One is going to be on the Delta V3 indicator. One's going to be on the OSR trading. One's going to be on SBR trading. Guys, we're going to review the trades out of the live trading room for the week to talk about why we target a 90% strike rate. Guys, I've got 2 really awesome traders that I'm going to be interviewing who are absolutely lovely. Guys, and I'm going to preview what's going to go on in 2026. And most importantly, guys, there's a lucky door prize every 30 minutes. So if you would like to come along, guys, to that annual conference, please do not be shy. The link, guys, is down the bottom there. Now, for those of you in the webinar, I can paste you the link. But for those that are out there on YouTube or otherwise, technology doesn't allow me to do that. All right, so let me leave it up there as long as I possibly can. Let me get the link for those that are in Zoom. As I can't give it to everybody else, because I don't have the technological capability to do that. Now, my goal, guys, just so everyone's aware, my goal is to get more than 100 registrations for the annual conference. It's going to be our first ever. So that's, again, another little challenge for me to try and achieve. As I said, guys, it's 100% free, and we're going to be spending a lot of time talking about how to trade really well in 2026. So, again, I do believe it's going to be a lot of fun, guys, and there's going to be a lot of stuff learned. Now, what to expect today, guys? I would expect the market to be moving very fast today. It's very fast indeed. The screens will be displayed as per the purple squares on the right-hand side. I'm going to focus on the 4 things. I'll focus on the 4 things, guys: candlestick analysis, delta trading, ratios and candle dominance, and finally ABC and step. We are going to be using primarily, guys, today ratios. The market is moving beautifully. Those that are on the FDAX is setting up an absolutely stunning reversal as I talk to you right now. So, guys, let's get into the charts. We are going to have to break this down relatively quickly because we are in, dare I say it, for a particularly volatile session. Now, let me make sure that you guys can see charts. You should be able to see charts. In fact, that is a stunning reversal on the NASDAQ as well. Nice, stunning reversal occurring on the Nasdaq. So those of you who are Nasdaq traders or S&P 500 traders, you guys may already be short. Let's break it down, guys. Let's look at for you. We'll go to the S&P 500. I've got a warning on the screen, guys, which is very rare. Very rare. We need to be very, very careful today, guys. Very careful. The market is probably going to go nuts. Okay, for everyone that is going to go short on the FDAX, guys, you have a 4-point turning bar short. Right, one of the strongest reversal signals in the world. All right, so just watch that one. Now, let's go. Let's go. I'm going to run through. Let me do that, guys. I'm going to run through the S&P 500 first. Guys, being very, very much for the S&P 500 traders, but also the Nasdaq traders. So first couple of points, guys. First points to realize. The FOMC announcement was positive last night. So NVIDIA, guys, the profit was significantly higher than what was forecast. As a result of that, most of the markets around the world, guys, are up over 1% today, basically off the back of that NVIDIA news. As there's also a lot of talk about the AI being a tech bubble. As I would suggest, it is not a tech bubble at all. I would suggest AI is here to stay. So there's a lot of sort of rumor mongering going on about AI, guys. I think AI has a very bright future. There's no doubt. So because it's going to be a little bit volatile today, guys, what we're going to be looking for the Nasdaq and S&P traders primarily, we're looking for really, really lovely, guys, really, really lovely dual market signals. Now you've just got exactly that signal, guys, on the S&P 500 and the Nasdaq simultaneously. So that little delta V2, guys, that little red diamond there on the S&P 500, guys, relates to this little static bar reversal. So what does it ultimately mean? If you're already short on the S&P 500 because you trade the European pre-market, guys, using these indicators, your targets would be 4, 8, and 12, and you've already gone 15 ticks towards those targets. So anyone that's short on the S&P, if you're relatively new to trading, guys, and you trade on that delta, then you want to try and hold this right through to the European Open to see if we get a little bit of a meltdown, which would be good fun. All right, now for those that are looking at slightly more strategic moves, okay, mate. Yeah, nothing I can do about it at this point in time. Yeah, unless you say nothing I could do. All right, now what we're going to do, guys and girls, is daily chart at this point in time. I appreciate that, mate, but yeah, with 18 minutes to go, I'll be focused literally just on here. I've got no choice with 18 minutes to go. Now, what does it mean, guys? Here we've got a daily, we've got a week daily long. Now, this is 100% based on the NVIDIA announcement that came through. Yes, please. Yes, please. So the NVIDIA announcement came through last night, guys, obviously quite positive. We've got a danger zone on this daily chart, guys. Everyone knows the middle of the trend indicator, typically where these guys get caught. So if we do buy any higher, I wouldn't be surprised if we get caught at these red Fibonacci's, or the extreme would be this 88.6 Fibonacci above. As I would suggest, we could get a really, really lovely turn down here, particularly if Europe needs to sell. For those that are short on the FDAX on the 4-point turning bar, as I said, one of the strongest sell signals in the world. You guys are gliding through your profit targets at the moment, guys. So well done if you are short on the 4-point turning bar. Bringing down, guys, bringing down to the 4-hour chart. This is why we need to be very, very careful. As I love long-range shorts on both of the American markets. This is a -4 rated static bar reversal short on the S&P 500, which is the biggest market in the world, guys, bar none. So again, I'm more than happy to talk about the mathematics of that. Right here, guys, these guys have failed at the 78.6 Fibonacci perfectly. So we are likely to get a really, really powerful sell down on open. That's why we have to be careful. I basically just make sure when we're not getting in with silly risk. Now, with that said, MJ, what I might do is we've got a potential issue with logins. So I'm just going to send a message. LTR TTP. I'm just going to send a message to Samurai headquarters, guys, as quickly as I can, because we've got a lot to go through. And all All right, I've sent a message off. We'll see how they go. Now, with the 60-minute chart, guys, we're looking again as we roll into the European Open. We're looking at a really, really lovely little short. Guys. So at this stage, I would suggest we're looking for long-range shorts, guys. So long-range shorts and short-range longs at this stage. But obviously, we can change that. We can change that assessment if we cruise down. Remy, your third target of 150 on the Nasdaq. That's absolutely brilliant. Well done. So for those that trade, guys, for those that trade the European pre-market, you may have heard my computer talking to me before saying we've got climactic volume on the S&P 500. So that's that extreme volume candle here. You can see the failure, guys, here at the 78.6. The beauty of that is this extreme volume basically said these guys are highly likely to reverse, and when they reverse, they're highly likely to go a long way. And that's exactly what a number of the S&P and Nasdaq traders are already sitting in. Now back to the S&P 5-minute chart. Again, what we need to be acutely aware of, we've got an absolutely incredible static bar reversal over here on the left-hand side. Now that is already traded through to really, really lovely profit. If these sellers close back down into that SBR again, you can see this little delta here. That little delta there pertains to this entry point over here. So effectively, this is the institutional orders now coming into the market saying we've had enough of today. We're now going to turn around and send it back down. One of the reasons they're doing that is something to be very aware of if you're going to be trading the European Open. This is the correct definition of the Asian high. So what has just occurred is the traders have tried to close outside the range of the Asian high. They weren't able to convince anybody else to join them. And as a result, they've been pushed back inside the Asian high. Now, what that ultimately means is we are highly likely to trade to the Asian low. So anybody that is short on either the S&P or the Nasdaq or the FDAX, please try and hold your trade for very, very long-range targets because you're already taking off to the downside really nicely. If you don't trade the pre-market, guys, that's okay. We will probably catch up, guys, on European Open. We've just got to be very, very careful. We've got to be very, very careful of what that looks like. Now, let me just do this. 24991, if we start dropping, we'll worry about that later. 25181 is a very, very strong sell point in the market, guys. And guess what that candle's just done? Guys, that's a 4-point turning bar short on the Nasdaq, has closed back inside this a 181 strong sell point. So that's why we're getting this sell down that we're getting at this point in time. Now, as that being said, if we run up, guys, watch for a 4-hour 50%. That's a long way. That is a long way from where we are right now. Just to give you an idea, the 4-hour 50% is right up here, right? Right up here, 25387. Well, chance of getting there, not very high. Chance of getting there, not very high. But if this sell down, guys, if this sell down off the Asian high, so the same thing is happening here on NASDAQ. If this sell down off the Asian high, which is, that is not correct. That is not the Asian high. That is the Asian high right there. Actually, I'm wrong. That's the Asian high. So exactly the same thing has occurred here, guys, on the S&P 500. Sorry, NASDAQ, I should say. They've tried to close outside the range of the Asian high. They've basically been unable to convince everybody else, and as a result, they're falling down. So again, everybody that's short, guys, if you're short on the S&P on the NASDAQ, then try and maximize the profit on that trade by holding it for 15 minutes, please, as per your rule of three. Right? As per your rule of three. If we go much lower, guys, 131.75. 131. Wow. Okay. If we go much lower on the S&P 500 and the Nasdaq, if we do go much lower, okay, we could see two things happen. All right. So this is a 4-hour SBR short point. Okay, 4-hour SBR short point. Most importantly, guys, if they trigger and short, we're going to run down very convincingly. If they try and trigger the short and fail, we're going to run back up the other way. So we may actually get caught, guys, in a trading range between the high side of the candles at the moment and the low side. Either way, we're going to get a ton of opportunity today, guys. So I wouldn't be concerned if you're not already profitable. I wouldn't be concerned about that. We do have to be very disciplined today on European Open. because the market is highly likely, guys, highly likely to run pretty hot. Now, over here, guys, over here, this is where ultimately the careful comes from. Okay, what we need to be aware of is you guys are in, for the European-based traders, you're in an ultra strong 4-hour long. So we've got to be very careful, guys, very, very careful on the FDAX that we don't get on the wrong side of a very, very angry buying market. In saying that, the FDAX and the FESX, guys, needed to come up here to close their gap. The FESX has just closed their gap. So for those people that are short on the FDAX or the FESX, you want to try and hold that back down to today's gap, which is all the way down the bottom. Now, what do I mean by that? As this gap over here was created a couple of days ago, today's gap is all the way down here. So if we do get a sell down, guys, they're probably going to come all the way down there, which is an enormous move for the FDAX traders. Guys, down to the 60-minute chart. Okay, that's our 60-minute chart. We are about to pick up an absolutely stunning reversal short on the big charts. Guys, a stunning reversal short. So anyone that is short on FDAX, you're going to try and hold it. Look at this. Wow. You're going to try and hold that short as long as you possibly can. For those that are not short on FDAX already, guys, we'll look at joining the selling campaign if we get some buying failing on the opening candle. All right, I'm dropping down layers here, guys, just to make sure we're on the right path. I would suggest the Europeans, guys, might try and buy first a little bit, then turn around and come back down the other way. This is looking a lot like a 15-minute chart swing trigger long that's going to roll over into a short. All right, so again, they will ultimately show us what to do, guys, when we start the market. Okay, so that's FESX. Please note, guys, really important, both European markets are gapped up. Another point today, there is no high impact European news today. So again, we are literally at the beck and call of FOMC from last night. Just double checking. Nice. So our basically our measure of volatility, S&P 500 volume, as S&P 500 volume has just hit 105,000. So our volatility today is going to be twice what it is normally. As mind you, we have had a number of very volatile days this week. As yesterday and the day before, we navigated the volatility very carefully. So guys, let's just do exactly what we've done for the last couple of days. Guys, we're just going to follow the trading plan verbatim. No surprises, no silly decisions, nothing along these lines. And guys, and most importantly, no revenge trading. Right, this revenge trading is for silly people. Now, as that being said, we've done the FESX, we know about that. If the FESX does drop, guys, we've got a number of very, very strong buy signals sitting down the bottom here. Guys, so it's highly likely they're going to try and close their gap. For those that are not aware of what the gap is, that's the price gap from yesterday. As much as the FDAX does not have to close it today, if they start moving down, there will be a number of traders that try and push for the gap as a milestone. Okay, they've been doing it since 2009, so there's kind of no reason why they're not going to do it today. Steve, how are you? I hope you're fantastic. Now, for the FDAX traders, we've got the 23500. Guys, 23500 is the gap we need to close to the high side. They've just gone and closed that gap, guys, literally before we started the session. There's your 4-point turning bar short. So anybody that is short on the FDAX, you're looking for a 25-point target. It's already gone 5, 10, 15, 20, 25, 30, 35. It's already gone 40 points to the downside. So if you have taken that trade, if you are a pre-market trader, guys, well done. If you're not, we're going to get some other little trades that I want to participate in. Now, guys, this is an absolutely amazing failure point. So again, the pre-market traders have hit the 161.8 perfectly. Normally, we like trading off the 133 extension, guys, which is hiding down here. So don't be surprised at all if on open, which is around about 5.5 minutes away, the buyers may push up. Guys, I'm expecting them to push up first, turn around, fail. They may even do us a major favor by coming back up, picking up that 4-point turning bar or picking up that Delta V2 short. No, that's the wrong thing. So we are going to focus very heavily on that delta V2 short. Okay, so that's what we're going to focus on. Now, at this stage, go to the slightly larger charts. I think we are going to pound to the downside. So this candle doesn't close for another 3 hours, but this is looking very, very short. We'll go down to our best friend, the 60-minute chart. What I would suggest on the 60-minute chart is we are going to pick up a really lovely ratio-based static bar reversal short. That's also a climactic candle. So that tells us the buyers are using way too much volume trying to push this market up. That will draw the attention of some institutional traders who would like to go and close the gap. What I would suggest to everybody today, dropping down to the 15-minute chart, same analysis from the FESX. These guys are likely to go up first before failing and coming back down. I would suggest to everybody, please be very, very careful. I would like to know if this little candle went up before it went down. Did they go up before they went down? That is a very interesting point. Let me just duplicate that into a new tab. I'm just going to switch this to a 1-minute chart. Just to check what they did. They went up first before they went down. All right, so then we'll get rid of that one. We don't need that. Okay, so come back here. So these guys went up before they went down. As that means the buyers now own the stair step on the FDAX. So with the buyers owning the stair step, we are looking for selling-based reversals. All right, we're looking for selling-based reversals. Now, I just want to remind everybody, guys, today I've said I want you to be really, really careful. Guys, really, really careful today. The reason I'm saying really, really careful is that the market's going to do one of two things. Obviously, there's a lot of positive news about not only FOMC. There's a lot of positive news about NVIDIA. So what it ultimately means is there's this buoyant attitude in the market that says, yay, everything that goes up is amazing today. The flip side, guys, the Europeans have already responded to the positive NVIDIA news and similar things. If they decide to carry on that news, then we're going to move through 23500 up here, and we're going to start moving to the high side. I will have to readjust my Fibonacci's if they do that. Now, the flip side of all of that, if these guys do decide they're going to run down, it is highly likely the Europeans might try and run in the opposite direction to the US markets. So we have to be very careful today is that we use our reference charts to our advantage. If these traders do sell down hard, we have a long way to drop for the Europeans to close the gap. But I'm just going to reiterate to everyone as we come into today's session, there's no guarantee is that the FDAX is going to close its gap today. All right, so just be aware that just because we see, hey, there's a gap to close, please don't be a gap trader. So a gap trader is somebody who just pushes the sell button hoping they go and close the gap. Just so you're aware, probably 70% of the time, they won't actually close the gap in the day after the gap's created. So the gap traders normally get themselves into trouble pretty quickly. Now, is the key for the US-based traders today, if you're brand new to what we do or you want to target a very high strike rate, which is what I will be focusing on today, which will be closed candle trading. What we're looking for, because the markets are going to be volatile, is we are looking for dual market agreement, which means I want the S&P to agree with the NASDAQ, and I want the FESX to agree. I want the FESX to agree with the FDAX. All right, now just to reiterate to everybody, guys, with 60 seconds until the gun goes, I will guide everybody today, guys, for the most junior trader. There will be some trades coming into the LTR that are slightly more advanced. For the FDAX traders, we're looking for the buyers to push up first, fail at a very, very well-known psychological area like the gap Fibonacci's running through here, and then fail badly, right? So we're looking to follow the normal rule. I've got buyers owning the stair step on both European markets. I'm expecting the buyers to push up first, fail badly, and then come back down. However, we will let them guide us on exactly what we are and are not meant to be doing. All right, so please be careful today, as the market is likely to be volatile. But we are very good at volatility trading. So what we want to do is we want to make sure that we are trading very carefully and very well. So I'll just let these guys bop along. Right, sellers now own the stair step on the FDAX. My sellers own the stair step on the FDAX. All right, now this opening candle is not climactic yet. So guys, we are not climactic yet. Very hard to get a Fibonacci extension at this point in time. Let me run a Fibonacci extension. Now we're climactic. There is no point running. Oh no, that extension is actually okay. So for the opening candle FDAX traders, okay, we are setting up a pre-bottom reversal. So we're setting up a reversal long at exactly 420. All right, there's a reversal long setting up at 420. If you are an opening candle trader, as the long will be at 420, not below 420, please. And you'd be looking for a 5-point first target. You're through your 5-point first target already. Those, if you are long on the pre-market box, you've got 133 Fibonacci extension agreement. You'd be long at 420. Your targets are 425, 430, and then whatever you can get your hands on. 425 is already paid. Nice, 430 is already paid. Now what we're looking at is the potential for these guys to run a little bit further. Please make sure you have no risk on that trade. All right, so for the FDAX traders, please make sure you have no risk on the pre-bottom trade. If they come back down again, guys, we need to see the sellers push down very, very convincingly before we take the same trade again. All right, so anybody that's gone long on the FDAX, guys, off the pre-bottom for a 5-point target and a 10-point target, you've been paid. Guys, let's just watch what these guys do. NASDAQ traders, you are now looking for a black diamond delta long. If you trade the opening candle, guys, you have a black diamond delta on your screen. Guys, at 148.25. If you are going to go long, guys, I would try and hold that long for a 20 and a 50 tick target, please. A 20 and a 50 tick target, or 20s and 100s. Guys, please make sure you control your risk at the 20 tick mark. Okay, please make sure you control your risk at 20 ticks. I'm going to bring a box on, guys, for the new traders just to highlight what 20 ticks is. So if you're long on the lower delta there, if you're long on the lower delta, now this is only for the opening candle traders. This is a dynamic entry, not a static entry. For the static entry traders, this is not for you just yet. Okay, now for those of you that have gone long on the FDAX, again, your entry's at 420. First target's 425. Second target is 430. Guys, the third target is at least a 25-point target, please. At least a 25-point target. Now, with all of that said, anybody that's long on the NASDAQ, right, you're looking for a 20-tick first target. Then you're going to control your risk, and you're looking for at least a 50 to 100-tick second target, please. All right, now let me just watch this FDAX. We are in the last 90 seconds, so please no new entries on any trades. All right, so no new entries on any trades. If I've got anybody long on the FDAX, eyes off the pre-bottom and the 133 extension, if anybody is long, you've actually traded a mathematically perfect signal. So just to reiterate, guys, first target 5, second target 10, third target 25. Once you're through your 5-point target, please cut all your risk off, please. Toby, technically, yes. Mate, technically, yes, it will be. All right, so we were expecting these guys to sell down initially, guys, get caught, turn around and come back the other way. So we've got that. I would expect some buying to come off the back of the FDAX now. There's no question at all. So I would expect some buying to come off. As in, I would expect to see some buying. What I would be very aware of at this point is for the FDAX traders, we are going to pick up a climactic reversal. Now, if the FDAX closes under, just hold on one sec, lots of moaning. What's going on? Okay, so At this point in time, as at this point, so then I would stop trading, unless you can. Sorry, guys, we've got a technical issue here with my beautiful bride not being able to get into the LTR. FDAX traders, your climactic reversal, if we get a push down well under the R1, then we're looking for a long over the top of the R1. Now, for the climactic reversal traders, that trade has already started climbing. That one has already started climbing. Now, the flip side of the already climbing, we have a climactic reversal on the NASDAQ as well, as the climactic reversal on the S&P 500 is not as strong as the NASDAQ, guys, and not as strong as the FDAX. Dan, nice work, 5s and 10s. That's an absolutely fantastic trade. Big, well done. So anybody that is long on the FDAX on a climactic reversal, it's a seller-owned candle with a seller-owned close, causing for a buying-based reversal to go back the other way. The link for TTP is in the members area feed. So it's in the members area feed. So guys, Akito likes to be able to watch my screens when she's trading. She's already profitable, but she quite likes to watch what's going on. Okay, now at this stage, as buyers have stolen the stair step. Right, so now we're looking for selling-based reversals on the FDAX with FESX agreement. So we'll just wait and see what happens there. You've picked up a trade on, well done. So Dan, you're positive, nice work. Thank you, Steve, appreciate that. Now, with all of that said, guys, anybody that is long on the NASDAQ on a climactic reversal, your backup trade is the black diamond delta long just here. If you are going to take any of the delta trades, guys, the lowest one of the candle is always going to be the best because you carry the lowest amount of risk. Once again, guys, we're going to use a 20-tick first target and then a 50-tick second target at this point in time. We'll just see what the volatility does today. Now, we won't forget those gaps, guys, or those fibs. That is absolutely incredibly important. So FDAX traders, you've had an opening candle pre-bottom reversal reinforced by Fibonacci. You've also had a climactic R1 reversal. If you are long on the climactic reversal, on the FDAX, guys, please try and hold it for as long as you possibly can. Toby, that is a valid tier 2 reversal as well. So for the tier 2 reversal traders off the back of the Platinum program, you're long at 447 for a 25-point target, please. So you're long at 447 for a 25-point target. Okay. Now, at this stage, I've got no new trades on NASDAQ, no new trades on S&P 500. For the NASDAQ traders, again, you may be long off the climactic reversal with a delta as a backup. If you've taken that delta, at this stage, the delta's gone 10, 20, 30, 40. It's gone over 50 ticks to the high side. So please make sure first target 20, guys, second target 50 or second target 100. Please make sure that you don't hold any risk on these trades. These buyers may burn out. MJ, beautiful trade. These buyers may burn out, and if they burn out, we don't want to be buying anymore. We want to be selling. Okay. TTP LTR Thursdays. Okay. All right. So I will have to fix that. Nothing I can do about that at this point in time. Unless you're in the Zoom. Maybe if you're in the Zoom, then you can jump on the link. Okay, so at this stage, as buyers on the stair step. So buyers on the stair step, we are looking for reversals short on the FDAX. As we are looking for reversals short on the FDAX, as I said. Now the flip side of the reversals short, as what I'm looking for is ultimately for the FESX. So ultimately for the FESX to fail badly, set up what could be argued as a really lovely second tier reversal short, and ultimately fly a very long way to the downside is what I'm looking for. So at this stage, we'll just let these short traders come in and show us what they're doing. Just let the short traders come in. Let them show us what they're doing.